Hello everyone, how's it going? In this video, we're going to talk about Palantir, trading under the ticker symbol PLTR. The financial market has been going through very volatile swings recently, and one of the most talked about and sought after stocks is Palantir. In this video, we will go through what the company does and what it represents, the recent price action, the company's financials, and my recommendation regarding whether it should be bought, sold, or held. If you appreciate my content, please consider to drop a like, comment, and to subscribe to my channel. Also, please check out and use the links in the description section, as every help is greatly appreciated. So in today's trading session, Palantir's share price increased by around 10% at closing compared to the day before, having recovered above $10, which in my opinion is huge. Like, this is fundamentally going to change the way people look at the stock. And this is going to create the momentum that we've been looking for. And to be fair, I would say that even if, there will still be other obstacles here and there, this should mark the beginning of a full recovery for Palantir, assuming that the macroeconomic environment doesn't get worsened like in a sudden and significant manner. Of course, that's a lot of hoping. But then again, if we assume the worst case scenario, even if we assume the worst case scenario, that is, I would say that the market at large has been pricing in all sorts of negative news. All the way from inflation to recession to nuclear winter, all kinds of stuff. And they are saying that they're no longer willing to send the stock price of Palantir lower. That should mean something. And I think that, and I quite agree with people saying that it's not just the earnings that's encouraging. It's because people's mindset has been changing as well. People are now saying, we actually think that this is going to work. You see what I mean? Like, we actually think that there is a future for a company like Palantir. There is a future for the services like Gotham and Foundry. And that Palantir, even compared to its rivals, is considered to be good. They're, more than good, like they're probably better than many of their rivals. And the fact that they have like long-term relationships, commercial and acquaintance relationships with government agencies, large companies, and so on, with very deep pockets, this is definitely going to help. And this is, to be honest, one of the main selling points of Palantir as a company. So for me, this is definitely the beginning of something new and not just the end of the former glories. If we look at the long-term price action of Palantir, we must ask ourselves whether this company will have a place in the economy of tomorrow. We know that the company will not be profitable for another few years. That much has already been priced in. We also know that Palantir is in a highly sophisticated area of the economy, and that it aims to become the analytic dashboard of the wealthiest entities around the world. The true debate is whether Palantir itself can stand the test of time, and whether the market will believe in its potentials to become something bigger and more critical. Palantir fell by almost 80% from the peak of the share price, from $35 down to $7.28. Much of this is due to the overall market trend, and the rest is caused by doubts on the company's growth potentials, as well as the business model to work with government agencies. Now, personally, I believe that Palantir has been testing its bottom for some time now, as the downward slope stopped the progression for more than 6 months. Ever since the price reached about $8 back in May of this year, the rest of the downward slide is probably caused by the habit of just going lower by default. Does this mean that the stock will reach new high very soon? Maybe not. But on the other hand, I do believe that Palantir will have a place in the future and that its price is due for some significant change as well. Given that it's been down by so much, the only logical direction that it's going to go is going to be up. Palantir Technologies is a software company specializing in providing big data analytics and management solutions to various industries, including finance. The company's flagship product, Palantir Gotham, is a powerful platform helping organizations to make sense of their data by providing advanced data integration, analysis, and visualization capabilities. One of the key features of Palantir Gotham is its ability to integrate data from a wide variety of sources. The platform can work with structured and unstructured data, including text, images, and videos, and can also handle data in multiple formats and languages. This makes it an ideal solution for organizations with data spread across multiple systems and departments. It also provides advanced data analytics capabilities, including natural language processing, machine learning, and predictive analytics. Those features allow organizations to uncover hidden insights and patterns from the data. Another key advantage of Gotham is the ability to provide secure and role-based access to the data. The platform uses a combination of technical controls and policy-based access to ensure that only the authorized users can access the sensitive data. This is very important for organizations in the financial sector, which are subject to strict regulatory requirements for data security and privacy. Palantir's solution is widely used by government and intelligence agencies, as well as by major financial institutions, consulting firms, and other kinds of organizations around the world who can afford it. This is due to the platform's ability to help these organizations to make sense of their own datasets and to identify patterns and trends that could optimize their decision-making. Now, as we look at Palantir's financials, the first thing that is noticeable is the positive gross margin. Above all else, this is a decent reminder that the company's core business seems to work. It is true that revenue has been growing slowly, which sparked some worries from investors, but the fact that the gross profit is positive means that the main issue is the scalability and the diversification of its operations, which may solve the problem once they reach a critical number of clients. We gotta remember that Palantir's revenue managed to grow despite the fact that there is a de facto recession in many economies around the world, meaning Palantir's clients are relatively robust, which can be a good thing for the company. The cash flow reports suggest that despite having a net loss due to the fixed costs, Palantir can self-finance significant portions of its operations with a positive free cash flow at the end of each quarter ever since Q1 of 2021. This means that the pressure of Palantir to go through rounds of share dilutions would be relatively low, which is a good thing for the shareholders. Another significant aspect to consider is that its liabilities seem to be under control, currently around $933 million, which is mostly constant and slightly decreasing compared to the previous quarters. This is also very reassuring and suggests that Palantir is also keen on making sure that they have a low leverage, decreasing their solvency risks. There's about 33% of institutional owners amongst Palantir's shareholders. So what this means is that Palantir does have a significant endorsement from the money managers, but they are largely outnumbered by the retails, and that there will be a significant chunk of people going in and out of the stock based on the market movements and the short-term price actions. It would also suggest that Palantir is good for investment, but if we do so, we must be aware of the people who want to profit off the swings, meaning we need to ignore the short-term volatilities. One key behavioral difference is that institutionals can afford to wait longer for their profits, whereas the retails tend to come in and out in very short periods of time because they want to make quick profits. Also, institutional shareholders tend to be more active in corporate governance. They are more likely to vote on important matters like mergers and acquisitions, compensations, appointments, and so on. They're also more vocal in their opinions, whereas the retail shareholders, they tend to be more silent and more passive in front of different decisions to be made. Currently, there are around 4.2 million shares shorting against Palantir. Some believe that there might be potentials for a short squeeze, because those 4.2 million shares would need to be redeemed at some point, and right now it takes about 4 days to fully recover. With that being said, I believe that Palantir currently has a certain volume of short positions because people truly believe that the company has a lot of headwind against it. I don't believe that they are concerted, and they're also not entirely institutional. It's important to note that a short interest is not a guarantee of a short squeeze, but it's a metric worth monitoring for the investors. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment, and a short squeeze may not happen regardless of how many stars are being aligned. My conclusion regarding Palantir is that now might be a decent time to start buying up again. Of course, personally, my allocation in Palantir is currently around 0.6%. So, of course, I no longer have a lot of room to go forward, but I would say that over the next 3 to 6 months, I wouldn't mind buying an additional like 0.2%. And then the remainder of my allocation, I would probably buy them within the next couple of years. This is going to be what I have in mind. I believe that we should eventually build up a position where to reflect basically like the market's anticipation in tech stocks in general, because Palantir isn't exactly EV, it's not really fintech, it's more like analytical, right? It's more big data. And regarding that kind of things, my impression is that the market does see Palantir as an actual company doing real, like providing real services. They're not just a PowerPoint-based VC capital hungry kind of startup. And in fact, they've been in business for so long that I no longer think that they should be, categorized as a startup. They are certainly a tech company. And the future is still pretty bright for Palantir, in my mind. So with that in mind, I would definitely recommend to start buying Palantir now and to keep buying them over the next couple of weeks and even years. The maximum exposure should be between 3 to 5% of your portfolio.